Hey everyone, and welcome to this explainer. Okay, today we are taking aim at one of the most common yet, let's be real, fundamentally misunderstood pieces of financial jargon out there: credit card terminology. Together, we're going to completely demystify APR and uncover the actual true cost of that little piece of plastic sitting in your wallet right now.
So I want you to ask yourself something right off the bat. Do you actually know what your credit card costs? And no, I don't mean the annual fee, if it even has one. I'm talking about the day-to-day, nitty-gritty cost of using it. Look, financial acronyms are basically designed to make us gloss over the details, right? It's kind of like alphabet soup. But here's the catch. When we don't understand them, we end up paying for them, big time. So let's strip away all the mystery.
Okay, let's dive into this. Section 1. What is APR?
To really master this, we've got to start right at the foundation. APR simply stands for annual percentage rate. Now, in the simplest terms possible, just think of it as the official price tag of renting money. Because really, when we use a credit card, we're essentially just renting cash from a bank to buy something today with the promise that we'll pay them back tomorrow. The APR is the total cost of borrowing that money over a whole year. And yep, that includes both the standard fees and the interest. It's a universal measuring stick. It lets us compare one credit card against another, apples to apples. Obviously, a lower APR means the money's cheaper to rent. A higher APR, well, renting that money is going to cost you a premium.
Which brings us to Section 2, representative versus personal rates.
Now, what's really interesting about this is that this is where things get super tricky. There's basically a dual nature to credit card pricing. On the left side here, we have the representative APR. This is the shiny, bold number you see plastered on billboards. It's the advertised marketing rate. Looks great, right? But then on the right side, we have the personal APR. This is your actual granted rate. It's the rate the bank assigns to you specifically based on your own unique financial history, but only after you apply. And here is the big secret that banks definitely don't eagerly shout from the rooftops. Those two numbers, yeah, they do not have to be the same. In fact, to truly understand just how often those numbers are different, you need to know this one specific percentage: 51%. Just take a second to think about what that might actually mean. By law, a credit card company only has to give that incredibly attractive advertised representative APR to 51% of the people who are successfully approved for the card. Basically, it's a coin toss. If you happen to fall into the remaining 49%, well, the bank is perfectly allowed to offer you the card, but then slap you with a much higher, way more expensive personal APR. Imagine you apply thinking you're getting a sweet 19% rate, only to rip open your approval letter and realize, whoops, you've actually been assigned a 29% rate. So the cost of borrowing just went up significantly for literally almost half the people who apply. Crazy, right?
Let's move on to Section 3, how APR affects you.
And this brilliantly illustrates how this translates from theoretical percentages straight to your wallet. Let's say you're carrying a 1,000-pound balance on your card for a full year without paying it down. If you secured a low 10% APR, that balance costs you roughly 100 pounds in interest over the year. Not amazing, but hey, it's manageable. But if you fell into that 49% we just talked about and you were given a 25% APR, carrying that exact same 1,000-pound balance now costs you roughly 250 pounds in interest. It's the exact same purchase, the exact same amount of debt, but it costs you 150 pounds more simply because of that assigned APR. I mean, that is real money straight out of your pocket. Up next, Section 4, Types of APR Explained.
Okay, so we need to go one layer deeper here because a single card usually carries 3 entirely different APRs depending on your actions. First up is the purchase APR. This is just the standard rate applied to your everyday buying, groceries, online shopping, flights, that sort of thing. Second is the balance transfer APR, which is the rate applied if you decide to move debt from an old credit card onto this new one. But the third one? This is where things can get incredibly expensive, the cash advance APR. If you put your credit card into an ATM and withdraw physical cash, you trigger this rate. Cash advance APRs are almost always significantly higher than your standard purchase APR. And honestly, what's worse is that the interest usually starts compounding the very second the cash leaves the machine. There is zero grace period. It is a massive, costly trap that you want to avoid if at all possible.
Finally, we arrive at Section 5, Securing the Best Rates. While all of this can definitely sound a bit daunting, the good news is that we actually hold the power to dictate how lenders view us. So here are 3 highly actionable steps to help ensure we fall into that winning 51% who get the best possible personal APR. Step 1. Check your credit score regularly. Simply put, we can't improve what we don't track. Look for errors and dispute them. Step 2. Pay your bills on time, absolutely every single time. Your payment history is literally the single biggest factor lenders look at to judge your reliability. And step 3. Keep your credit utilization low. What this means is, if you have a £10,000 credit limit, try not to routinely carry a balance of £9,000. By using a smaller percentage of your available credit, you show lenders that you are incredibly responsible and, more importantly, not desperate for borrowed cash. I really want to leave you with this final thought to wrap up our explainer today. Don't let your credit card dictate your cost. Dictate your credit. Knowledge is absolutely your ultimate leverage here. Now that you understand the 51% rule and exactly how to avoid the trap of cash advances, the power shifts right back to you. Take control of those 3 steps we just talked about, optimize your credit score, and ensure that the next time you decide to rent money, you are getting the absolute best price tag possible. So go check your current credit card statement today and ask yourself, are you paying for the bank's marketing, or are you finally dictating your own terms? Thanks for joining, and see you next time.